Let us now look at one of the actual articles in a treaty. What we are looking at is Article 2.1 of the India-Netherlands Treaty. First, let's read this. This convention shall apply to taxes on income and on capital imposed on behalf of one of the states or its political subdivisions or local authorities, irrespective of the manner in which they are levied. So like I told you, the purpose of Article 2, and now specifically Article 2.1, is to tell you which are the taxes to which this convention typically applies. Several treaties have different forms, but I'm going to see what is there in some of the Indian treaties which is relevant. This convention here stands for the treaty, shall apply to taxes on income. Now you must be wondering, why is it that I have actually rounded off the word income? Kindly note that this does not say taxes on what form or shape. It does not use the word income tax. It doesn't use the word direct tax. It says taxes on income and taxes on capital, right? Imposed on behalf of one of the states. States here refers to the country. So let's say India or US for that matter, or of its political subdivisions or local authorities. As long as it is tax on an income, as long as it is tax on capital, right? It doesn't matter whether it has been levied at a country level, whether it is levied at a political subdivision level, which could be, let's say, a state, right? Or it is levied by a local authority. Even if it is levied by the country, even if it is levied by a political subdivision, even if it is levied by a local authority, as long as it is tax on income or tax on capital, these are basically covered by Article 2 insofar as India-Netherlands Treaty is concerned. Maybe I could have used the word Netherlands over here. That would have been better, right? Irrespective of the manner in which they are levied. Now, what could be the manner of levy? Manner of levy could be something like, imposed directly on the person. So let's say if a person X earns income from India, X is required to pay tax to the Indian government. Or it could be just that instead of directly paying, let's say there's a person Y who is making a payment to X. He deducts TDS, tax deducted at source, or a withholding tax which is applied. The manner of levy or collection could be different. It could be a direct levy, it could be by way of withholding. But that is not going to make a difference to the fact as to whether it is covered by the treaty or not. The sole criteria is it has to be tax on income or tax on capital. It could be imposed by the country, its political subdivision, which could be a state or a local authority. And the manner of levy could be either direct or through deduction. All these things are not going to make any difference insofar as the end result is concerned, which is that they will be covered by Article 2, and therefore from a treaty perspective, if a person wants to claim some benefit, he will be entitled to that. Let us look at one more treaty, which is the India-US Treaty. It reads as under the existing taxes. Now, mark the word existing. What this means is that when you are applying a convention, right, the tax which has to be applied is something which should exist on that date. If there is a tax which is proposed to be levied in future, that is not covered as a part of the Article 2.1. The existing taxes to which this convention shall apply are, now this is another way in which it is represented. So in this form, what happens is they mention what will be the taxes insofar as country A is concerned. In this case, it is United States. And what are the taxes which are country B is concerned, which in this case is India. So it says the existing taxes to which this convention shall apply are in the United States, the federal income tax imposed by the Internal Revenue Code, right? Federal is the country level tax that we are talking about, but excluding the accumulated earning tax, the personal holding company tax, and social security taxes. Now this basically sets the context that it applies to federal income taxes other than these three taxes which are mentioned here, and the excise taxes imposed on insurance premium paid to foreign insurers and with respect to private foundations. So it applies to the taxes imposed by the federal government and on insurance premium which are covered here. Provided, however, the convention shall apply to the excise taxes imposed on insurance premiums paid to foreign insurers only to the extent that the risks covered by such premium are not reinsured with a person not entitled to the exemption from such taxes under this or any other convention which applies to this taxes. So this is not something which is very, very common. So we would, for the purpose of our discussion today, not get into the detail of this. But what I'm trying to say here is that in the United States, mainly it is applicable to the federal income taxes. Coming to India, the definition of tax covers the income tax including any surcharge thereon, but excluding income tax on undistributed income of companies imposed under the Income Tax Act and the surtax. Let us spend a minute to understand the implication of this. I have told this to you earlier in my presentation for taxes only. So let's say when we look at the fee for included services under the India-US Treaty, it says that the tax which will be withheld in India, the right to India for taxing a particular payment which is amounting to FIS shall be, let's say, shall not exceed X percentage. What that means is when I'm talking about this X percentage, right, this X percentage shall include not only the income tax, but the surcharge thereof as well, right? So this X percentage, whether it is 10, 15, whatever that percentage is under the relevant article, that 15 or 10 is going to include not only the income tax but surcharge as well. You're not going to apply surcharge over and above this rate. Whereas if instead of this definition it would have been the income tax and these words were missing, right? One could have argued that on top of this 15% you may need to apply surcharge as well, right? And then the last line, taxes referred to in A and B above, which is in India and there, shall not include any amount payable in respect of any default or omission in relation to the above taxes or which represents a penalty imposed relating to those taxes. So if there is any interest which is levied for late payment of tax, that is not something which is going to get covered within the definition of tax. Or for that matter, if there is a penalty which is applied for not complying with certain tax or not paying up the taxes, those are not something which is covered within the meaning of tax, right? Again, I came back to my same example. If I paid $100 to a US company and the relevant article said apply 10% tax, right? Which means the tax to be paid in India should have been $10. Now the person didn't pay up and therefore a penalty of $5 was levied and there was an interest of $1 which was levied. So the total amount he paid in India was 16. For the purpose of treaty, it is only the first amount which is considered as tax. The remaining two, namely the penalty and the interest, will not be considered as tax for the purpose of treaty.